Good morning, everybody. Finally, the big day. Let's see how big it turns out to be. Hopefully, maybe the whipsaws will end. We get some trend day, up or down, who cares? But interest rates, they were that reversal day. I mean, it didn't break out of the range. It's the 10-year. It didn't break out of the range, but it's been hanging down there, and it was a bar that closed at its high. So I just chose this to just show the whipsaws that continue. Um, and the next day, gap down and below that, but not below the range. It's a little lower this morning. But other things happened yesterday, things that fell apart after that jobs number, indicating a stronger belief that a recession is coming. If it's not here already, which I believe it is, just whatever numbers you look at that want to confirm that or not. Maybe they're not there yet. A lot of people, when we hear a lot of people talking about not yet, but hey, when you start hearing tens of thousands of people losing jobs and all the other news that's going on there, call it what you want. You know, as they say, it's a recession. It's not a recession until it hurts you. But a lot of people out there hurting. So everything's still in the trading range here. We'll take a look. So, the move that started yesterday was here, and, the big sharp collapse is always big momentum move creates a void. And weakest link, because we've seen how many times it could rip back in the other direction. And it didn't get very far before sellers showed up again. And as we can see here, we got this pivot creating resistance as there was nothing here. And, a little bit more of a meaningful reversal bar there, suggesting lower. And you can see the just mess that's going on here on the 5-minute chart. And I suspect that is going to continue. A lot of times on Fed Day, you do get an initial move first thing in the morning, and then things just kind of quiet down. I don't expect there's going to be anything significant, but then the fun begins after 2 o'clock. So one of the things that we always look at is retracements. I think Dan and I did an MT Live on that a week or two ago. And we talked about how retracements are a big part of the analysis, whether, you say a retracement from a swing low to a swing high, and, how far does it pull back or the lack thereof, or retracements between bars. And one of the things that I pointed out yesterday was, wow, look at the retracement, the size of the retracement in the Dow, almost giving back everything of that power move up that occurred last week. And so when you get a power move like that, two wide range bullish bars, what is it supposed to do? And we're price pattern traders. We go with historical patterns. It's supposed to go sideways up here, dip down. If it does dip down, buyers step up and push it back up toward the top of the range there. And eventually you get a continuation pattern where prices break out. Well, this week we spoke about, I think it was maybe yesterday, was that, after the Fed day, the daily chart had to come into alignment with the weekly chart. And this isn't the best example of it. SPX is a better example of this weekly chart with this bottoming tail bar, which is a continuation pattern. It's still at the top of the range and at this resistance, but after dipping down under these lows and coming back up again, this having that strong move up, it's got to, move around up here, and maybe today turns out to be a green day and retracement between bars. So there are retracements in a bar, right? Over here, weekly chart, bottoming tail bar. It dipped down and back up. When you compress the data, it looks, in this example, one bar, whereas over here, it looks like multiple bars. That's just understanding multiple time frames. So today could be a 2-bar reversal if we get a green bar back up. And that's the unknown. We're going to have to see what plays out today. So at SPX, the numbers are relatively attractive, is based on the lack of movement, potential lack of movement prior to 2 o'clock. But of course, you're going to want to step aside, you know, when that number comes out. So there's enough premium at 4205, which is up above 4200, the whole number. That's good. And down below here at the 50 MA, actually 4035. So you've got lines of defense. And you put on an iron condor, do both sides, and manage them and get out by 2 o'clock. Hopefully, the time decay by then is enough to step aside or decide to do nothing. Well, the premium's there. Things aren't moving, Robert. And so you see where prices are here. They whipped down, they whipped up. The open is about where yesterday's close is. The average range over the last week or so has been about 50 points. This is not a pivot yet because I don't have a third day, right? Only one day to the side here. And so, based on, again, what I said, thoughts, it's probably not going to move that much, but can you get out by 2 o'clock? Maybe so. You are in the area of the 50 MA, which is below this swing low, and above 4,200 is above these highs up here, and beyond the 50-point average. So it makes sense. I think the question is, as always, the unknown. And here, it's not to the end of the day. You got until, a little after lunchtime to decide what to do. So that's my thoughts on this and what's presented today. All right, other markets. The dollar isn't doing much. It was down a little bit. We've been talking about interest rates and the dollar, bottoming out, which they still are, but like everything else, just whipping around. Let's see when the recession ends, everyone will be talking about the recession that took place in 22, 23. Meanwhile, everyone is talking about it as something that will possibly happen. Well, if I remember correctly, JF, was it sometime near the end of last year, the definition of a recession, well, it's always been the definition, 2 negative quarters of GDP, and that happened. And then all of a sudden, hey, let's change the rules. So, it's a crazy market. As you know, the inflation that's happened, it's been decades since we have a situation like this. It's been never that we've had an administration trying to destroy the country. And so, it's kind of a new world. And, next year, hopefully, whatever your bias was about, the last presidential election, hopefully, from my point of view, hopefully enough pain has been inflicted that people make a change from what is to whatever is a better choice than what is. So that, and that's all we can do is hope for the best, unless you, hey, run for president, run for Senate, be a House of Representative, and whatever. And see if you don't get dragged into the swamp. All right. I say, could you see oil or in an ETF weekly, please? Yeah, we look at oil almost every day. So one of my comments on the last inflation report was they had an improved number, but they were talking about oil. The number was calculated when oil was down here, and it was reported when it was up here. So now the next report that comes, like, oil is going to be down here. So not looking at the charts and seeing what was going on at the time, he's saying, oh, things got better. Well, they didn't get better. They got worse, but that wasn't, what was actually being reported. And now oil's going back down here again. And it's just another representation of the vicious whipsaws that have been going on in this market. I mean, when you get a breakdown who knew it was a failure at the time? Not me. I mean, you get a wide range bar down and it's stabilized, and then it rallies over 100% back up again. And now it's almost 100% back down again. This is schizophrenic on steroids. You just find the craziest schizo person and just inject them with heroin and cocaine, and then you got this market. So it looks like it's going back down to the low. Right? I mean, that's what else would you think looking at that chart? Here's the ETF. Break down, rip back up, back down again. This is nuts. And I've been doing this a long time. I can't remember any insanity like this. Anyway, looking at some other things, negative SMHs broke down, but hey, maybe that doesn't mean anything anymore. That breakdowns never follow through in this market, but it did reverse yesterday. And I said, it's in an area where it's likely to make a turn. And so, of course, it was helped by that jobs number. But look, you've got a weekly chart that's kind of questionable as to the daily sell setup. And I believe one of my comments yesterday, I know in the green room, was that this kind of alignment between weekly and daily, if it's going to move in the direction of the weekly, it needs more time to back and fill on the daily to get away from this mess. And of course, this isn't enough time yet. So more indecision. Right? This did great coming off of the October low when the dollar topped out. Right? You go and look at the dollar index, which you can look right here. Here. And back there in October, the dollar topped out and moved down, and the market stabilized, and semiconductors moved up, and Europe moved up, and other things started to do well, but still lots of whipsaws. So as we looked at a minute ago, the dollar is down here, right? There's the October high down here, retesting. Which way is the dollar going to go? Which way is interest rates going to go? What is the Fed going to do? How many other questions could we come up with that would spin our heads to make a decision, which would say, I don't know. I'm waiting to see something decisive to happen. And so there's been a lot of credit spread trades. There's been individual stocks. There was a lot of bottoming patterns that were working out well. Now, not so much so as the uncertainty has increased. So there's been opportunities in this market, but there's also been some treachery or schizophrenic, call it whatever you want. Dow futures, they came almost all the way back down, right, to the bottom of that move. So what we're looking for at the end of this week is, hey, do we get a bar in alignment with that bottoming tail bar from last week, or is it negated? We're waiting for more information. So here's a breakdown and another almost 100% retracement. And if you disregard the day-to-day insanity that's going on here, right, you're waiting for more confirmation of what we would call this, believe it or not, is bullish price action. Because so far, this strong move up, prices are going sideways. So if you forget the candles and just visualize this on a line chart, this is going sideways at resistance, which suggests demand is strong, but it hasn't been strong enough to break out. And supply, which is coming in, hasn't been strong enough to break it down. Hopefully, after today, we might get something meaningful to happen. Well, questions, comments. The breakdown failure looks like a stop run, the tradable void, crazy. Well, every move is a stop run, because every place where there's a pivot like this, while we look at pivots, every time prices are in an uptrend and prices then violate a prior swing low, there's going to be a stop run. Now, a stop run, you could, if that comment means that it was intentional, in one sense, maybe we really don't know. Maybe there are algorithms. Of course, they do know, right? Common sense, there's going to be stops down there. So, selling that and then looking to get the hell out of the way relatively quick, because one of our MTS concepts is, after a greater than 100% retracement, prices stabilize. And in this market, not only do they stabilize, they rip your head off and go all the way back up to where, they came from. So whether it's the Dow, whether it's crude oil, whether it's bonds, and so, whatever, that has just been the theme of what's been going on in this market. So I'm going to end it here. No matter where you look, this is all over the place. I'll let Dan finish up. So we'll just see how today ends. There's another downside whip and back up again in the transports. So we'll talk tomorrow. Those of you on social media. Otherwise, come into the green room. All yours, Dan.
Good morning. You summarized it perfect on the broader market of.
Dan, I'm kind of laughing at myself a little bit here, because when I started this, I said, I don't know what I'm going to talk about, because nothing's moving and everything's the same. And meanwhile, I could have continued to talk. Anyway, green, MT Live today. We'll talk there.
Yeah, so like you said on the weekly, that's exactly right. Are we going to get this green bar ignored? Or are we going to get a continuation up? So we got weak banks, we got recession, we got earnings all over the place, we got Fed today, so I don't know. All right, earnings trades here. We did 2 earnings last night, one good, one ugly. A GNRC, nice downside shakeout. We did the 85s. All right, so Greg, they're saying they have to switch to my screen now. So does that mean YouTube is not going to see it? I thought you weren't going to use that.
Let's see. All right.
Okay, yeah, now I see it on my.
I forgot. There you go.
Okay, all right. All right, so we have beautiful 85 short puts on this. I'm just going to bid 2 cents to get out. And then here's a disaster gap. We did the 210s, and Estee Lauder's is getting its head chopped off. But, we said we'd take assignment. Monthly chart has major support at 200. So keep an eye on it. 30-minute high. I would put this in the excessive gap to put on a new trade. So I need more information on that. Let's see. Batet. I like the close yesterday. It's selling off here a little bit pre-market, but I like it over yesterday's high. Here's earnings here. CVS. That's an ugly downtrend. It's the type of pattern that I say could be the start of a bottoming pattern, but it's still on a downtrend. But today's Wednesday, it needs to get over Monday's high. So I got nothing to do with it now. STLA capping down, and that's an ADR. 30-minute low, day trade maybe, but I'm not crazy about it. Here's what we call a bull sandwich. You got the bull meat in the middle of 2 wide range red bars, and it's gapping up here to 40.60. We'll watch it, maybe on a controlled pullback. EMR, 86 bucks, just trading range, but put spread idea. Oil company gapping up, but no pattern. You're gone. EXC, no pattern. TT, I don't see a gap. Yum. Things that have run into earnings like this, I just have a bias to short call spreads in the earnings. Even if it gaps up the next day, then I still have a bearish bias on under a 30-minute low. So this, let's see, 138, that's a pretty big gap. On a weekly chart, that's going to leave a nasty top and tail if it closes down there. Starbucks, actually, we were looking to sell the 120 call spread, same kind of idea, that it's run so much into earnings, so that one would have worked out well, but we did not do it. Oh, with Estee Lauder down, I mentioned ELF. ELF is gapping down here also, but look at this monthly. That is a climactic sell setup. I mean, the month is just starting. And last month had a minor top and tail, but this runs so much, to me, it's done its job, and now start going down to a smaller time frame to get on board. And today could be the day. I don't expect any new longs or any new trades for me, probably ahead of FOMC. I put in our Telegram, not PayPal, eBay had an earnings gap breakout, pull back, bottoming tail, minor support, bullish 1, 2, 3 on the weekly. So if it were not FOMC today, then I would give this over yesterday's high. So I just posted it as a watch. KHC, yes, we just talked about it. FSL. It looks like it's opening flat, Thomas. It's a sell setup, but I don't short $2 stocks. AMD short 83 and change. That's a big gap. It is bearish. I like sell setups from topping patterns where they set up at resistance and the converging 20 and 50. So that was a good turning point, but it could have gone up or down, obviously, on earnings, because over Monday's high, I would have had a bullish bias. Gold, beautiful engulfing close yesterday, opening up with sheep pennies. A little bull flag on the weekly. Gold and GDX were the only stellars yesterday in all of my sectors I follow. BRSK, bullish gap, but no pattern to me. Let's gapping down to 110. It's a bearish gap. I don't know what to do with that. And I think that's therapeutics anyway. CDW, I don't see where it's opening, but that's a big mess. Oh, my alarm on Intel went off this morning. This had a big bullish gap on earnings, and we were watching it on a pullback. I actually had set 2 alarms, one up, one down. So this is nice pre-market for some reason. So this could be the, I'm not doing anything ahead of the Fed, but that could be a perfect place to get on board. Garmin, we were saying, was a perfect pattern to do a condor yesterday into earnings with wide trading range, flat 20 and 50. Perfect pattern, but there was some. I think we considered it. There wasn't enough juice. BIP, I don't see where you're opening, and no pattern. Balder, this has been strong. Some folks in the green room were trading it on this turn, I remember. Actually, 3 times. We gave it to subscribers on this gap breakout. Here's a good example. We were talking about turns yesterday. A buy setup with a 1-bar turn versus multiple bar turn. And this is a multiple bar turn. And then you had a gap breakout. That's too extended for me then. Tech, I see one print at 77.50. I don't trust it if it's just one print. We'll come back to you. And I is a big mess. Those overlapping bars give me a headache. TRMB, I don't see any prints, but it's a bearish downtrend, daily, weekly, monthly. Uther here, no prints. We were considering a put spread on that, but you would have to go to the level 1 screen to see where the bid and offer are to get a feel for where it's going to open. Bottoming pattern here, ABR. I'm going to set an alarm at 11:40. I think it can maybe go to the 50. 11:40. Oh yeah, Lilly. I don't know if Lilly was earnings also or just it's Alzheimer's news, but this it's far from the 20, 20 far from the 50. And it was, when I do gap and craps, the bigger the gap, the better. So when it was here at 4:30 this morning, I posted to our weekly options trader that this is a candidate for a 30-minute low call spread as a gap and crap. So that's on my watch list. I have it bottom right. Bid went way down on Lilly news. Yeah, gap down. Yeah, so that's interesting. That's a 5% range. 300 to 316 pre-market. That's big. There's the Batet. I got the alarm. SSRM. 30-minute high. It's opening flat. Has a void. Little buy setup on the weekly. Alley is bearish daily, weekly. And there's our generic. I'm bidding 2 cents, but this might be one of those situations where they're in 5-cent increments. Let's check it out. GNRC. GNRC. Yeah, it's 0 by 5, so he's not displaying my 2 cent bid. So if you wanted, you can either let it expire worthless Friday, or if you want out, then the strategy I teach is you can buy the $90 puts and get yourself a free put spread. It's totally up to you. The odds of this now failing and going all the way back to $85 by Friday, it just seems